Hi, I'm Peter Resnicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly. Market a little bit bullish this week as prices were really on a roller coaster ride all over the place. We had gap ups, gap downs, some tariff news, but overall prices were higher at the end of the week. But what about the underpinnings below those prices, such as market profile structure, overall volume, and market internals? I'm going to show you in this video how for most of this week those things were really at odds with the higher prices, and maybe this leads to a rollover in days and weeks to come. All right, let's get into it.
So this weekly S&P chart, if we start with it, shows the bullishness that I just talked about in the intro to the video, just basically saying that we came to a low and we rallied a bit. Prices obviously did close a bit higher. And if we look at the other majors that we watch closely, we see the same thing with NDX and same thing with DJI, with the Dow as well, correct? So we did get some prices moving higher. But as I discussed in the intro to the video, what's more important than price is always the context around price. And that context is made up of a lot of different things. If we're talking about market profile, then the context is very, very varied. There's tons of context and nuance just in market profile. But within the market itself, we can also look at context and say, okay, what type of market internals, for instance, did we have on the move up? What was the overall volume? And we can apply market profile then with all of its nuances to the market and say, what was the structure in terms of ES futures as the market was moving up or down? And that gives us some clues as well. So let's just start with market internals if we could, and looking at some of this stuff. So obviously this video is being recorded on a Friday, so you can see we have relatively bearish breadth here at the lows, and this here is at minus 1400. That's a relatively a bearish number, and also our ticks, our distribution is definitely more bearish than bullish. We have the triangles here of the 15-minute bar closes below the zero line. So that's relatively bearish as well. But what's more important are the prior days when the market was actually going up. And I apologize that I should have taken snapshots here to show you, so you'll just have to kind of take my word for it. But we have all these 5 days in the market as we were moving higher. Most importantly, here on Tuesday and here on Wednesday, which is kind of a strong day up. And we can look at these days here in the on the breadth, for instance. Like we know that, for instance, price-wise on this Monday, it didn't look like it was that bad of a day down, but breadth was really just kind of falling off the cliff here, right? And again, when you look at this stuff here, like for instance, if we just keep these 5 days in focus, notice that this is day one, which corresponds with this here. And this is day two, which corresponds with this. Makes sense, right? Pretty simple, pretty easy. So that's our breadth. And again, I don't have snapshots of what these numbers were here, but you're going to take my word for it. When we were moving up here in these days, okay, this breadth here was very weak. It was literally like 1.5 to 1 positive on both sides for both of these days. And what's interesting is that you can see this just from the visual representation, is that as price moved up all week, notice what happened with the breadth. Here's your reading on Tuesday. And why is your reading on Wednesday only like this? And on Thursday, just minimally higher, correct? And yet, price is moving up. So there's a divergence right there. That is essentially a divergence right there, where you see the breadth is really not all that strong. And this is also the same thing here. On Tuesday and Wednesday, right, you have this market where Wednesday actually goes higher than Tuesday, but your advanced decline line is here. Thursday, just a little bit higher. And then Friday, we had an ugly gap down. And what happens typically, go to the zero line, and that's usually the spot where the market falls apart when the zero line is touched from the lows. That's an easy day trading trick that you can use. It's very, very important to know when the zero line gets tested from the bottom or from the top. Usually that's going to be a turn in the markets, and as you can see in Friday's activity, that actually corresponded very well with the turn. See how the crosshairs move here? There's the high of the day on Friday, and there is also this high here. You can see that these crosshairs are matched up right around 11 a.m. So market internals basically, to me, were showing a lot of weakness over the course of the week, especially, most importantly, and again, I apologize, I don't have the pictures to prove it, but those of you who pay close attention to the market, or you listen to Brad all day long on our ShadowTrader Squawk Box, you know that when the market was advancing in the Tuesday and Wednesday advances, we never saw a strong breadth. We had that breadth at like 1.5 to 1 positive, and it just didn't make a whole lot of sense. Okay. Now, beyond that, let's talk about volume patterns. Remember, we know when the market went up. Let's look at T-vol, which will give us the volume on the New York Stock Exchange. Let's look at some hourlies here. Here's some hourlies. And look at the drop-off here. Here's Monday, and here's Tuesday when the market went up, and here's Wednesday when the market went up, and here's Thursday when the market went up, right? And if we go back, once again, just to recap, we know that Monday was the bearish day, and that was the high volume day, and then these were the up days. And again, on the hourly, here's Monday, which is the big volume day, and then the volume dropped off precipitously from there. So that's also another sort of pattern that's very, very important to pay attention to, is why wasn't the volume increasing as the market kept going up? It was actually coming off a bit. Okay, let's move into market profile and look at some nuances there as to what was going on. These are the 5 days in question, and I'll just point out all the different sort of structural deficiencies that I'm seeing here. So one of the things right off the bat that I'm noticing is that these 2 days up are clearly both shaped like a letter P, and letter P is indicative of short covering. Letter P happens because you have lots of shorts covering early, causing this stem here of the P. Same thing here. Lots of shorts just covering early, and then it balances out later. Interestingly enough, when that happened, look at the point of control on this day. It never migrated higher. The greatest amount of volume on this day was transacted here and not up here. Why wasn't it up here? Here's the widest point of the profile. It would make sense that it would actually be right here, but it wasn't. The big volume was actually right here. The next day, P formation again, and really poor structure in that you have lots of single prints. Whenever the profile is broken up by single prints in the middle, that signifies emotion and people just kind of covering shorts in a panic, and they're not really thinking, and it is not indicative of longer term buyers. Then we had another P formation, so 3 days in a row of opening down here and then quick short covering up. And in this day again, point of control did not migrate higher. Again, why isn't the POC up here volume-wise? Because this is the point of control of volume, not time, yet the most amount of time was spent actually here, and yet more contracts were transacted down here, so that's not a good sign. And then that brings us to Friday, where we had basically just a short covering rally early. So again, you had this structure at the bottom, rallied, came to where? Right to a pretty nuanced level, right to value area high or close to it. And again, where did the point of control close? Down here. The greatest amount of volume transacted was in the 2860 area, but not higher up where the profile was fatter. So that again doesn't make a whole lot of sense. All right, so those are the nuances in the profile that are basically showing us that there are some structural deficiencies here, and we're putting that together with what we saw, market internals and also volume. Those are the 3 things that we just looked at. Okay. Last but not least, we're going to look at something that we can sometimes think of as like the 4th or 5th internal, and that is small caps, is the Russell. Is that notice that I purposely didn't show you the Russell chart on the weekly early on when I started the video, because I wanted to show it to you now, and just to point out how the Russell weekly bar was actually a bearish bar when the rest of the major averages actually had bullish bars, in that they had a green body, correct? And the Russell was actually a red body. And more importantly, in terms of the uptrend, which is obviously just a very minor uptrend of not many days, but it is an uptrend nonetheless, that is already being tested, especially if we're depending on how we draw it up to this shadow right here, that is already being tested by the rut, whereas the other majors are not quite there yet. You clearly see that this is still well above the trend line in the SPY, and in the NDX, same thing, we are still well above the trend line. So the Russell could be acting as a leader here, as we sometimes see it do. We've often seen this, that when volatility increases a bit, we see the rut acting like a leader, and it has been breaking down ahead of the market. So that I think is also somewhat of a bearish sign going forward. Okay, so just to recap and sort of wrap this up, where does that leave us for next week? Let's just go back to the majors for a second. Obviously, the candle, the reversal candle is in on the SPX daily, but again, we have not yet come down to the ascending trend line. So our target for the SPX will be right around here, and the 2840 level is what you should be looking for earlier in the week. And NDX will be also same thing. We want to draw the same trend line. and we'll be looking for an area here, right at about 7,400 or just above, maybe 7,410 in the NDX. That's what we'll be looking for, and that would be really a bearish sign, especially if we close a daily bar underneath. Now, the other side of the coin is that, of course, the Russell is very often prone to large reversals that come out of nowhere. So the level you want to be looking for this particular coming week is only if this high gets negated, because it is obviously the first day of kind of a breakout bar to the downside. But if that red bar gets negated all the way up by some bullish price action, then that could put a wrench in all this, and maybe we dribble a bit higher. But that, to me, is the number one signal that I would be looking for, is to see if the Russell gets some strength, and that would make me change my mind. If not, I do feel that the underpinnings of the market here seem to be pointing a little bit lower at this time.
All right, that's all for this week. Thank you, as always, for spending this time with me on your weekend. Subscribe to this YouTube channel to get updates as to when new videos are posted each week. Also, go to ShadowTrader.net and put your email address on the front page, and you will be updated on everything that we're doing at all times. And that will also give you free access to 3 different newsletters, this video each weekend, and lots of educational articles. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.